Well, global markets are lower in trade when we're looking at it this Friday morning, as well as they were lower in trade on Thursday. When I'm looking at the US, currently the focus is entirely shifted towards that inflation number, which is expected to come in on Friday. And that has spooked markets to a large extent. In fact, the Dow was down nearly 2%, 1.94% lower on the Dow. The S&P 500 was down 2.4%, and the Nasdaq was down 2.75%. Now, largely, the downtick has been driven by even the EU commentary, which has further spooked markets by suggesting that inflation will go up in the EU in 2022 from 5.1 to 6.8%. That has, or that trend is what is really spooking out even US markets on that inflation number, which is expected to come in on Friday. Also, there's a macro problem which is happening in the US. There is an economic slowdown which is happening, and that too is what is concerning investors at the moment. The dollar, though, looked even stronger. In fact, it gained, it's above the 103 mark as we speak, 103.2 in early trade today. So the dollar is definitely protected at the moment with bond yields on the rise. So the US 10-year bonds have held out above that 3% mark. So the yield is above 3% on the 10-year bond at the moment, definitely looking strong as we speak. And of course, a lot of that is a fallout of the inflation fears which are gripping investors at the moment. But let's talk a bit about where European markets were. Of course, that as inflation numbers have been increased, or the expectations have gone up, we are seeing European indices under pressure in trade. In fact, yesterday the Stoxx 600 was down 1.3% in trade yesterday, and as was a poor handover, Asia has started on a weak note in early trade today. The Nikkei is down nearly 1.5% as we speak. The Kospi is down 1.2%. The ASX 200 a more tempered 0.75% lower. The Hang Seng is down 0.2%, and the Shanghai is the only major Asian index looking in the green at the moment, and just 0.1% is where the Shanghai is gaining at the moment. So that's how things are panning out. In terms of the SGX Nifty, it's down nearly 1.5% in early trade today. So definitely negative cues coming out of even Indian indices and expectations from how the Indian index will open in early trade. When we're looking at commodities, well, oil has come off its highs. It was above that $122 a barrel mark. It's come down to around $120, largely on the back of the lockdowns announced by China. So that will continue to hopefully aid oil prices and hopefully help oil prices come off, but they've not come off meaningfully, at least as of now. It's not been a major impact. Gold has shown signs of weakness, largely on the back of a stronger dollar, better bond yields. Bond yields going up definitely hurting the prospects of both gold as well as cryptos, as we will talk about cryptos going forward. But bond yields, as I did mention, around that 3.05% mark, they've gained around 5 to 10, something between 5 to 10 basis points over the last couple of days is where that movement is, sharp movement. Even when I'm looking at some of the European bonds, they've in fact moved far more stronger. And let me talk about that. The Italy and German bond yields spreads have been the highest, or have risen to the highest level since May of 2020. The 10-year Italian bond yield is up 25 basis points, highest jump. The UK bond yields, the yield was up around 10 bips as well, 2.35% is where it stood. So clearly, the trend seems to be going towards bonds, and that's hurting the prospects of gold. But gold is still able to hold out just below that $1,850 an ounce mark. So not bad as such for gold, and bonds definitely gaining well. When we're looking at Bitcoin, on the other hand, it saw a bit of a fall below that 31,000 mark. Now it's around the $30,000 mark is where Bitcoin is, and cryptos in general are fluctuating between minor gains and minor losses.